On Friday, shares of Novo Nordisk did lose some weight. They did lose some value. It was down 17.83%. It now has a market cap of $364.5 billion and a forward PE of 22.4 times. Year to date, as you can see, the stock is now down 17%. Over the last 3 years, the stock is still up 62.5%. Now, when Novo Nordisk did come down, their competitors, Eli Lilly, did go up. So what exactly has happened? And is this maybe a buying opportunity? Is this really a buy the dip type of opportunity? Let's discuss all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I'll first start off with a small comparison, right? Eli Lilly to Novo Nordisk, forward PE, EV to EBITDA, price earnings to growth, price to sales. Right now, at the time of making this video, from a forward PE's perspective, price to free cash flow, price to sales, EV to EBITDA, Novo Nordisk is lower, cheaper than Eli Lilly. If we look at price earnings to growth, it's a bit more expensive at 1.11 compared to 0.92 for Eli Lilly. Now, you might say, oh, how come free cash flow is this bad, right? This metric right here. Well, capital expenditure did increase quite a lot. So 23, 24, and by the way, this is trailing 12 months free cash flow, price to free cash flow. So that's why Eli Lilly here is taking a hit, but that should improve in the next 12 months. Currently, the average analyst price target for Novo Nordisk sits 52.5% higher than the price we're at right now, even after this small, let's say, decrease in average price target because of what happened on Friday. If we look at what the analysts are expecting this company to do from a revenue and free cash flow perspective in the next coming years, free cash flow is expected to grow by 38.4% in fiscal 2025 and then another 28-29% in fiscal 2026. Revenue is expected to grow 16 to 20% over the next 2 fiscal years. The majority of its revenue is generated in the United States, with Europe, Middle East, Asia being the second largest market for them. And of course, the majority of their revenue comes from Ozempic. And so what happened was basically this. They released the results of its phase 3 trial for the new weight loss drug candidate called CagriSema or something like that. Don't know how you pronounce it correctly. These are really, really weird terms to pronounce, so apologies for that. But basically what happened? They said the following. When evaluating the effects of treatment, if all people adherent to the treatment, people treated with CagriSema achieved a superior weight loss of 22.7% after 68 weeks compared to a reduction of 11.8% with the other one, 2.4 milligrams, 16.1% with semaglutide 2.4 milligrams, and 2.3% with a placebo alone. Now, of course, when you read this, you might say, that's quite good, no? That's quite good. Well, yes. But their target was 25%, so they came up short by 2.3%. And that was enough for the market to say, you know what, you deserve to lose close to 20% of your value. And at the same time, Eli Lilly and another name, Viking Therapeutics, went up on this news. Now, what's also interesting, that's something someone shared on X, is the following. If you compare Wegovy, Zepbound, CagriSema, and Viking's solution and even Eli Lilly's solution here, we can see that the one in question, the yellow line right here, still is quite good, right? So okay, I can understand maybe if it was 25%, then this stock would have gone up and Eli Lilly down because it does pose a threat. Now that the results were not as good as expected, 25%, then okay, I understand maybe it has to come down a little bit and the others go up a little bit because the threat is basically removed or reduced. But still, if you look at Novo Nordisk solutions, it should still be considered as a top one, no? I also want to cover Eli Lilly. So here we can see that revenue and free cash flow is expected to grow quite quickly in the next coming fiscal year, especially free cash flow. Free cash flow in fiscal 2024 is expected to grow by over 1,000%. Like I said, because 23 was a year where free cash flow was very, very minimal compared to the other years. Then 37.4% in fiscal 24 and another 38% in fiscal 2026. And here as well, we can see that the majority of their revenue comes from diabetes revenue, and this time we've seen a rebound in neuroscience revenue as well. As for where the revenue is generated, well, the majority comes from the United States, then Europe, then Japan and China. Now, if we compare both companies' gross profit and gross profit margin, despite the huge difference in market cap and valuation, we can see that actually right now Novo Nordisk is actually, let's call it a better pick, right? Gross profit margins are higher, gross profit is higher as well. If we even look at free cash flow, here you can see the huge difference. Like I said, 23-24 for Eli Lilly is a year of maybe an exception, probably an exception, because if you look at the previous years, it's been much higher than that. But if you look at Novo Nordisk, I mean, it has been a couple of years already where Novo Nordisk does generate more revenue than Eli Lilly. And as we see right here, Eli Lilly and Company has a market cap of close to $700 billion. A forward PE 34.9 times. We've seen the pricing metrics before, we compared them, but market cap close to double that of Novo Nordisk, while revenue-wise, it's still a bit lower, but as we can see right here, and as we've seen, they are expected to grow faster than Novo Nordisk. But then again, the question here is that you might ask yourself, maybe you've asked that question already on Friday, was it an overreaction? Is minus 17.8% an overreaction? Because it's not like something failed here. Yes, it came in 2.3% lower than their own target, but the results were quite positive. Now, maybe it might not destroy the competition, but it can definitely compete with the competition. And in my opinion, that should be enough, right? I could understand 5% on the day being down because of that, fine. But being down at one point over 20%, in my opinion, is an overreaction because this is still one of the best companies to own, especially if you're looking for European stocks. Funny enough, this was on the list for the top European stocks to have in your portfolio or your watch list, and now it just became 17% cheaper. Looking at the stock right now on the weekly, you can see it is oversold. We're back to levels not seen since August of 2023. And back then, August of 2023, we've got a huge green candle here. That was the earnings report. So if we switch quickly to the daily, we can see that back then we've had that huge gap, a huge gap here. And guess what? Well, that huge gap was mostly filled on Friday. Not all of it, but mostly filled. And so to conclude, is this a buy the dip opportunity? In my opinion, yes, especially if you're looking for these types of stocks. I mean, yes, maybe they deserve to be down a little bit because they missed their own target. I mean, if you go on to say, oh, this is our target, pretty high, blah, 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 and then you miss it by 2.3%, then yes, you deserve to get hit. But it's not like they're going to get hit from future revenues and free cash flow and profits and the product will never exist. No, the product will exist. Just the results came in a little bit lower. Now, of course, you can always go with Eli Lilly. That's always an option, a tremendously good and well-run company. If you're looking for dips and sales, then maybe Novo Nordisk, especially if you're in Europe, maybe that might be a good play. Let me know down in the comment section below what you think about this. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.